Hi, everybody, and welcome to our continued discussion about the types of business entities that an entity can be. In our last week's class, we focused really on the sole proprietorship and the general partnership. And this week, we're going to talk about corporations and limited liability companies. So I'm going to do the same thing for corporations that I did for sole proprietorship and general partnership. And that is to walk through the characteristics, the major characteristics of these types of entities. Because at the end of this unit, I want you to be able to compare these types, the sole proprietor, the general partnership, the corporation, and we're going to talk about two types of corporation, both the C corporation and the S corporation, and then limited liability companies. And so the goal at the end of this part of the class is to be able to discuss the major characteristics, both similarities and differences between these types of business entities, and compare them also with advantages and disadvantages. Because the goal here is also to try to figure out if you're starting a business or you're thinking about entering into your own business, which one is the best fit for you? Because everybody is one, even if you don't actively choose one. And there's some reasons why you might want to be a corporation or you might want to be a limited liability company. So, and there might even be more than one potential right answer for you. So that's what we're going to get through. And so this class this week will really focus heavily on corporations and limited liability companies. But then we're not quite done with our unit on corporations yet, because corporations are so dense and there's so much to learn about corporations that I've actually devoted another 2 weeks just to talking about the corporation, because there's a lot more to talk about. So everything I mentioned in this PowerPoint is just the introduction to corporations. And then next week and even into the week after, we're going to go a lot more in depth into corporations. So stay tuned, especially if there's something I mentioned here that you'd like to learn more about. Okay, so let me set the stage for you. We're starting to talk about corporations. So far, we've learned about sole proprietorships and general partnerships, as we've just said, and we can remind ourselves of some of the similarities. They're very easy to start. You don't have to go to an official state website and fill out paperwork to identify or name yourself as a corporation, and they don't cost a lot of money to start. And of course, we talked about one of the other advantages being the single taxation or the pass-through taxation, because the business itself does not pay its own taxes, right? Any money that the business earns passes through right to the owners of the business, and the owners pay taxes on what they earned on their own personal tax returns. Now, if you don't remember, put your hat back on and try to remember from last week, what did we talk about was the major disadvantage of both sole proprietors and general partnerships. And that, of course, was the concept of unlimited liability. The idea that any liabilities that the partnership takes on, then the partners themselves owe those obligations. You don't get to draw that shield or that protection over yourself as a business owner. So now comes in the concept of a corporation, which when it began, and it's been around for generations, for hundreds of years we've had corporations, was the idea, and we'll walk through this, obviously I'll get off this main PowerPoint, but the idea behind a corporation is that the business is a separate entity from the owners. I'll let you sink that in for a second, because that's really very different from the sole proprietor and the general partnership, where you are your business. You are your business. But the corporation is the idea that I could establish a business and I can put my own money into that business. I can even get other investors to put their money into that business. And anything that happens to that business, I'm over here. I'm going to have my house. I'm going to have my personal things. And if that business gets sued, if the business can't pay its mortgage or its bank loan, I'm not going to be responsible for that. That business over there is going to be responsible. And so that's the background to understanding corporations, is that they are their own separate legal entity. In fact, the law recognizes corporations as a distinct legal entity different from the owner. So let's walk through some of the highlights of corporations. Your book does a really excellent job walking through all of the characteristics of corporations. So again, it's not my job to repeat them all for you here because you can read the book yourself, but I want to just hit some of the big ones. And I see my screen is cut off, so I'm going to see if I can make that a little bigger. All right, hopefully you can see that a little better now. All right, so some key characteristics about the corporation is that it is much more complicated. It just is complicated to form. You really can't wake up one morning and say, oh, I want to form a corporation. In fact, in next week's class, we're going to walk through the details about how you actually do form the corporation. We're going to go through much more of those nuts and bolts, but it is a complicated and a lengthy process. It could take a year, it could take months to form the corporation. Also, in comes the state. Remember, we talked about how corporation law, all of this law, partnerships, corporations, it's all a matter of state law. Every single state in the union has a state agency that oversees corporations. So one thing we're going to do in class next week is actually look at the Department of Corporations website in Massachusetts so that we can see what is required to form the corporation. Spoiler alert, the state requires a lot of paperwork to be filled out. And it also is expensive. You have to pay fees to the state to be a corporation. Also, my not legal advice to you is that it is a good idea to consult an attorney when forming your corporation. This is not one that you want to get wrong. You want to make sure you file all the paperwork correctly. What's that expression? Dot all the I's, cross all the T's. This is one that is worth it. Speaking of paperwork, a corporation has a lot of required paperwork in and of itself. We'll talk about how corporations have to draft their own bylaws. Corporations have to keep minutes of their meetings. Oh, yes, they have to have meetings. When you're a partnership, you can be super flexible. Remember, we said that that was one of the advantages of a partnership is the idea that you can be very flexible. You want to have a meeting, you don't want to have a meeting. It's fine either way. But with a corporation, you actually have to have the meeting. Speaking of required meeting minutes and required meetings, another feature of corporations that makes it very different from a partnership, and we just talked about this, the flexibility of a partnership. A major difference is that corporations have no flexibility for how they are organized. In fact, state law says this is how you organize your corporation. Something else we will talk about next week are all the different people that you will see in a corporation. We have shareholders, we have officers, we have directors, and you need to have all of them. And you have to use the terms, the names for these positions that the state gives you. You don't just get to say, we won't have a president or a vice president of our corporation. No, the state says you have to have one, so you'll have one. So you can kind of see the theme evolving here. Corporations are complicated to form. And here you go with a huge negative of corporations. Although interestingly, this negative is not so negative in recent years. And this again harkens back to what I just said a few minutes ago. Remember we said the corporation is its own separate entity from the individuals that own it. It has its own legal identity. Well, different from partnerships, corporations are subject to what we call double taxation. So follow this for a second. Every time a corporation makes money on its products or whatever it does, and that corporation earns money, then the owners make a living too, right? Because they draw income from the corporation. But when tax day is due, the government says, you know what, corporations? We're taxing you twice. Because the government, and this is the federal government, this is a role of the federal government here, taxes corporations on the money that the corporation earns. And then after that, the corporation, after they've paid taxes to the federal government, will give income to its owners. And then guess what happens to that income? Well, it gets taxed a second time. The effect of this is that every dollar that a corporation earns is taxed twice. Now, what's really, and we call this double taxation. That's why it's called double taxation, because the dollar comes into the corporation pays its federal taxes first. Then out of that dollar, the rest goes to income or to the corporation. Any shareholder, which is the name for the owner earning income, they get taxed a second time. Now, what's really interesting is that one of the very first laws that was passed after Trump was elected in 2016 was to lower the corporate tax rate. Remember, Trump is a business owner. He came from the business world. Prior to, I think it was in 2017, the corporate tax rate was a whopping 35%. So every dollar a corporation earned was actually taxed at 35%. That's pretty high. And one of the major policy changes of the Trump administration was to lower that corporate tax rate so that corporations themselves don't have to pay as much in taxes. The effect of that, of course, is that it keeps more money in the corporation. So the corporation can spend money to, let's say buy new computers or build a new warehouse. The corporation can also pay its owners more money because it has more money to spend. Under the Trump tax law, the new corporate tax rate is 21%. So it's significantly lower than the 35% it used to be. Okay, so you might be asking yourselves, what about liability? Are you wondering about liability? I bet you are. So let's talk about, I forgot, I'm sorry, I have one other quick slide here. Couple other things about corporations. It's much easier to transfer interest because of the way the organization is structured. And another major advantage of a corporation is that it survives after the death of its owners. You actually can imagine that there's been corporations around for generations, and that's because the corporation doesn't die when its owners die. Okay, now to talk about liabilities. I have a couple of really fun slides here. I think they're fun. By the way, I'm at 12 minutes of my recording, so if I run out of time, I might shift and have you guys listen to a little bit on another page. Sorry about that. But let's take a look at what I have here. Okay, so why bother with double taxation? Why do all of this state paperwork? Why are there so many businesses that are corporations? It's because of limited liability. We'll also talk about that word limited liability when we get to the LLC. But think about this. That exposure that the owners of the partnership had, it's gone. And so take a look. I'll let you pause the video and take a look at this little drawing here. But then the point is, when a business owner decides to create a corporation, I might decide to invest, let's say, $10,000 of my own money into a bakery. And then each one of you will also invest in my bakery. Would you? Yes, you should invest in my bakery. Let's say each one of you gives me $50 to invest in my bakery. And we are all now shareholders. If we form a partnership, we are all partners in the partnership. And what if my bakery gets sued? Remember that in a partnership situation, there's no shield over the personal assets of the business owners. There's no protection in that lawsuit. When it comes to a corporation, when it comes to a partnership, there is no limited liability. There is unlimited liability. Sorry if I said that a little confusingly. Let's look at the next slide. Compare the partnership to the corporation. If we had formed our bakery as a corporation, not a partnership, and our corporation gets sued, my personal assets, the money that I didn't invest in the corporation, and the money that you held on to and did not invest in my corporation, it stays safe. It stays protected. The only money that we would ever risk is the money we put into the corporation. Our personal assets are protected. So why are there so many corporations? It's because of limited liability. Think about what that does to encourage investors, because you can turn to your investor and say, the most you'd ever lose is what you invested into my company, not the rest of your assets. So that is the major advantage to corporations. And it is why there are still so many corporations to this day. I apologize, I ran out of time to talk about S corporations, so I'm going to mention those in my limited liability slides, but I'll pick up on this, the one about the LLC. I'll pick up on this in that one too.